If you're a physician shopping for disability insurance, most of the decision comes down to one contract provision. You want a true own occupation definition of disability, ideally one that defines your occupation as your medical specialty. Get that right, and most of the other decisions fall right into place. Get it wrong, and you could pay premiums for 20 years on a policy that never pays you because you can still technically work even though you can't practice your specialty. Over the next few minutes, I'll walk through what that definition does, where your hospital's group coverage falls short, why surgeons have the most at stake, when residents should buy, which carriers write disability insurance for physicians, and what actually drives the price. I'm Jack. With Seaworthy Insurance, we place disability insurance for physicians, dentists, CRNAs, and other high-income professionals. Let's start with the definition. A true own occupation policy pays your full benefit when you can't perform the material and substantial duties of your own occupation, even while you earn income doing something else. For a physician, the version worth holding goes one step further and treats your occupation as your medical specialty. Some carriers write that language for board-certified physicians, and it matters because your income is built on the specialty, not on the medical degree. Think about what a disability actually looks like for a doctor. A cardiologist develops a hand tremor, a radiologist loses fine vision, an emergency physician takes a back injury that rules out 12-hour shifts. None of those doctors are unemployable. All of them can teach, consult, review charts, or move into administration, and that's exactly the problem with a weak definition. A policy that only pays when you can't work at all will look at a chart review job and decline the claim. A specialty own occupation policy asks one question: can you practice your specialty? If the answer is no, it pays, and whatever you earn in your second act stays on top of the benefit. Employer group coverage is better than nothing and worse than most physicians assume. 4 things to know about the group long-term disability certificate sitting in your benefits portal. The monthly benefit is usually capped, often well below what a specialist actually earns, and it's typically calculated on base salary rather than total compensation. The definition of disability commonly pays on your own occupation for only the first 24 months of a claim, then switches to any occupation right when a long claim gets expensive. If your employer pays the premium, the benefit is generally taxable and the coverage isn't portable, so it stays behind you every time you change jobs. Stack those together and group long-term disability works out to a thin, conditional layer. The setup we see hold up best is an individual policy with a true own occupation definition as the foundation, with the employer plan treated as a bonus while you have it. The more procedural your specialty, the more this whole conversation matters. A surgeon's income runs through their hands, and the gap between can't operate and can't work in medicine is enormous. A cardiovascular surgeon with an essential tremor will never operate again and could still fit in a dozen non-surgical roles. Under a specialty own occupation definition, that surgeon's claim is clean because the occupation is cardiovascular surgery and the duties can't be performed. Under anything weaker, the insurer gets to argue about all the other jobs a trained surgeon can do. Anesthesiologists, interventionalists, OB hospitalists, and anyone else whose work is physical and specific sit in the same boat. And the more your income depends on a specific physical skill, the harder that definition works for you. Earlier than feels natural, residents put this off because money is tight and the attending income hasn't arrived yet. And the delay is usually the expensive parts. Premiums are priced on your age and your health history at the time you apply, and both only move against you. Buying during training locks the health slate you have now, and policies come with future increase options that let you raise the benefit as your income grows without new medical underwriting. Many training programs also have access to Guaranteed Standard Issue Offers, GSI for short, where coverage is issued without individual medical underwriting at all. For a resident with any health history, that can be the difference between covered and declined. The honest rule of thumb is that the best time to buy is during training, and the second best time is now. The individual market for physicians runs through 5 major carriers: Principal, Guardian, MassMutual, Emeritus, and the Standard. All 5 can write true own occupation coverage for physicians. Where they separate is in the details, how each one defines your specialty, how they classify and price different specialties, what the partial disability benefit looks like, and how far the future increase options go. The same physician can get meaningfully different offers from all five, and the carriers that's strongest for a surgeon is not automatically the strongest for a psychiatrist or a hospitalist. That's the entire argument for comparing them side by side instead of taking whichever quote lands first. And it's the comparison we run every day. The premium is driven by a short list: your age when you buy, which is the biggest lever you control; your specialty, because carriers classify occupations and price the class; the benefit amounts, the riders you add, and in some states, whether the pricing is unisex. Waiting is the one factor that only gets worse, since every year adds age, and every year risks adding health history that gets rated or excluded. On taxes, pay the premium yourself with after-tax dollars, and benefits are generally tax-free. An employer-paid benefit is usually taxable. Tax treatment varies, so run your tax situation past a tax professional. Recap. Disability insurance for physicians starts with a true own occupation definition, ideally specialty specific, because a disabled physician can almost always still work at something. Group LTD is capped, taxable when employer paid, and switches definitions mid-claim, so treat it as a supplement. Surgeons and proceduralists have the most riding on the definition. Residents get the best pricing and the GSI window, and the five major carriers, Principal, Guardian, Mass Mutual, Emeritus, and the Standard, will price the same physician differently, so compare before you commit. If you want to see those definitions and prices side by side for your specialty, that's what we do at Seaworthy Insurance. We specialize in disability insurance for physicians, dentists, CRNAs, and other high-income professionals. The full written guide is linked in the description. Thanks for watching.